Venezuela is suddenly everywhere in the headlines, and overnight it feels like everyone is a Venezuela expert. Luckily, at RIMAC, we have advisors who spent decades working in emerging markets, including Venezuela. So we want to give you some grounded perspective on what the U.S. capture of Nicolas Maduro actually means for investors. Globally, when we look at situations like this, we first ask three key questions. First, has our central assessment changed? Second, has the long-term range of possible outcomes changed? And third, will markets start to price in a higher risk premium for binary geopolitical events before they happen? On the first question, Venezuela does hold some of the largest oil reserves in the world, but it currently produces only about 1% of global supply. That means we expect limited near-term impact on global markets and, if anything, a slight negative longer-term impact on oil prices as production ramps up. Oil is not the transmission channel that moves global portfolios here. On the second question, local political uncertainty ahead is unlikely to reshape global markets. We already live in what we call a polyfurcated world, with many plausible futures driven by large forces like geopolitics, demographics, and technology. This episode is simply another manifestation of that. On the third question, history shows that markets do not sustainably reposition ahead of binary geopolitical risks, even when those risks are elevated. If risk assets sell off purely on headline fear, that can sometimes create opportunity rather than signal a lasting regime change. Now, when it comes to Venezuela in particular, you may have heard talk about trading Venezuelan bonds or positioning for a recovery trade. Let's be clear. These are highly illiquid and deeply speculative securities. A dictator being removed does not magically create the political and legal stability that investors require. It is also not realistic to expect sustained U.S. engagement in a country that may require something like $100 billion of rebuilding capital, especially when Washington is easily distracted by the next crisis. Stability is the real missing ingredient, and it remains a long way off. Where we are paying closer attention is not just Venezuela itself, but U.S. posturing towards Colombia and Mexico, two large economies with democratically elected governments and relatively strong balance sheets. A political misstep there would matter far more for investors at home and abroad. Venezuela may dominate the news cycle today, but from an investment standpoint, this is still a basket case story, not a global market turning point.